Hello everyone, and I welcome you back to a new session of this channel. Our today's topic is accounting concepts, and I have gathered 9 concepts, basic and important concepts of accounting for you. The first concept is business entity concept. It assumes that business is independent of its owner. A business may not record its owner's personal expenses, income, liabilities, and assets. For example, if I want to go for a startup, then that startup is separate from me. If I will be having some expenses, if I purchase a car for myself, then this record will not go on the transaction of that startup. But if I purchase a machinery for that startup for producing my products, then that transaction would be recorded under that startup only. The second point is going concern concept. Accountants prepare financial statements on the assumption that a business may continue its operations for the foreseeable future. Except there are some exceptions if the business is unable to pay its dividends, if it is unable to raise credit from banks and other financial institutions, if facing losses and negative operations of cash flow, if facing an adverse financial position, if the company is unable to pay back its crucial debts, and the last, if it is facing unfavorable legal or regulatory actions against that organization. For example, as I said, I launched my startup with the idea of a going concern. I started business with a hope that it will continue its progress for years and years, and this should be my idea for running my business. The third point is money measurement concept. It assumes that companies record only those transactions that they can quantify and measure it in terms of money. Some example of non-monetary values include employees' competencies, product quality, employees' efficiency, and etc. For example, if we purchase building machinery or it could be raw material from suppliers, we have to find the monetary value of that particular asset. Then only we can enter it into books of accounts. The fourth point is accounting period concept. The accounting period concept prescribes a time frame within which a business records and reports its financial performances for the purview of internal and external stakeholders. The management can determine a convenient accounting period for the internal reporting, say 3 months or 6 months. But for the reporting to investors, government, and tax purposes, it is typically for the period of 1 complete year. Accounting period concept is paramount important for my startup. If I want precise analysis, then I can go on monthly basis, quarterly basis, or half-yearly basis. But for external purposes, as I mentioned, we only go for yearly analysis of our financial statements. The fifth concept is accrual concept. Under this concept, a business records a financial transaction in the period it occurs. It does not care whether the business pays or receives cash at the time of the transactions. This helps to record and report income, expenses, liabilities, and receivables. For example, if I purchased raw material of amounted 50,000 from my supplier, but I did not pay him at the time of transaction, I will pay him after 2 months. Then we have to enter this transaction on accrual basis because I will be going to pay him in the future. But today we have to enter this transaction in books of accounts. The another point is full disclosure concept. The business entity must furnish all necessary documents to the stakeholders, say investors, creditors, shareholders, clients, and other stakeholders. Disclosure policies covers revenues, depreciations, inventories, taxes, earnings, stock values, leases, and liabilities. To clarify this, you must not hide anything from your stakeholders. You must disclose all the things which is happening to your organization, and it should be recorded because it could help all the investors, all the stakeholders to have precise decision in their future investments. The seventh point is dual aspect concept. It states that every transaction affects two accounts of a business. Every financial transaction has a debit or credit, or a receiver or giver. The dual aspect concept is the foundation of double entry system of bookkeeping, such as journal, ledger, trial balance, and afterward when we are preparing our financial statements. The eighth point is verifiable objective evidence concept. A business can record only those transactions that can furnish documentary proof for. It means that if you want to enter a transaction in the books of account, you have to have some proof for that. You have to carry that vouchers, that bills, that proves this transaction is true and reliable. The ninth and the last point is historical cost concept. It suggests that assets and liabilities are recorded at original cost, even if the value of the assets changes over the time. Generally, this concept is criticized, and we clarify this with an example. Say if I purchased a house for $1 lakh in 2010, and in 2020 the value of that house is $2 lakh. Here the historical cost concept says that you have to record that original cost, that $1 lakh when you purchase that house. But somehow this concept is criticized by some authors, experts of accounts. Anyhow, this concept is saying you to enter that $1 lakh in the transaction. As usual, I hope you've enjoyed from this video, and if it is yes, do not forget to like, share and subscribe the channel. Take care and bye-bye.